Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Shares of Meta Platforms bouncing around, but up about 5% in the after hours. Now, the company did report second quarter revenue that beat estimates. Revenue coming in at $39.07 billion. That's a 22% year-over-year increase, beating estimates of $38.34 billion. And that family of apps revenue, that is the core business, $38.72 billion in the quarter, up 22%. Estimate was for $37.76. Carol highlighted the CapEx. The company's seeing total CapEx $37 to $40 billion, where investors saw $35 to $40 billion. The estimate was for $37.53 billion. So again, what we saw from Microsoft and what we saw from Alphabet.
Here's what I'm going to say. Their bread and butter is advertising. They did report better than the sales for the second quarter. So again, our right through, I'm looking at Kurt Wagner,
Carol,
offering evidence that the company's heavy investments in AI are helping it sell more targeted and personalized advertisements. That is still their bread and butter. So if they are saying we are spending, guys, and we're going to spend even more, but look at the results from the past quarter. And that's where I'm trying to make sense of the stock being up here in the aftermarket, up 5%. It's not like people are saying, oh my God, what are you spending all this money on?
You all thought that AI was going to make our jobs easier, when in reality, it just makes Facebook better at targeting ads to you.
Yeah, right?
So,
yeah, well done, Meta. All right, so let's get to it. Our team coverage with Bloomberg News contributor John Ehrlichman joining us from Toronto, along with Bloomberg News social media reporter Aisha Counts joining us in Chicago. Aisha, I want to start with you. How did Meta do?
I mean, I think you said it earlier. They beat on everything, right? The revenue beat expectations, actually the top end of what analysts expected. And they also beat on the amount of users that they have. I mean, they beat in every dimension. Now, the one thing you did mention, right, was that CapEx, which is that spending, a lot of which is going to things like AI infrastructure. You're talking servers and data and hardware and stuff like that. That increased a little bit, but because it was that bottom range, right, like their top line level didn't increase, I don't think investors are going to be that upset about that. So yeah, they beat on everything, changed a couple things, but I think overall it's good for them.
Hey, John, what sticks out to you here? You've had a few minutes to go over these numbers. What sticks out to you?
Just, Tim, that Mark Zuckerberg and Meta seem to have the script down pretty cold at this point. I mean, building on everything you've said, here is a company that over the last couple of years has learned its lessons when it comes to what starts to make Wall Street uncomfortable on the spending front. And I think that the fact that as you guys highlighted earlier, that they can make the case that the revenue that came in stronger than expected gets assistance from the investment that's coming from all this AI focus, that seems to be a helping hand here. I would add, though, that if you go back to the last quarter, remember, and by the way, this stock always moves a lot. Generally, it moves a lot after earnings, either up or down. But the shares got crushed because investors had to do another reassessment on this AI spending. So arguably, we've had some time to sit with this. And even the stock price, I know it's up a lot this year, but at last check, it was coming into this earnings report a little bit lower than where it was heading into the last quarter. So I don't think anyone would have been surprised to see a big spending bill, but you have stronger than expected numbers. And remember, this is also the company that's starting to find shareholder-friendly tricks in its playbook. They issued their first dividend, and they're buying back a lot of stock. So they've got the levers they can pull. But we still have to see how all this AI spending nets out in the long term. We don't quite know, but they're trying to paint a good picture so far.
Yeah, and for a stock that bopped up, I think, about 10% here in the aftermarket, we're now just up about 3.6%, still higher, but it continues as I think investors and analysts continue to go through the report, and we'll wait to see what comes out on the call. Having said that, John, how does Meta square with some of the other companies that we are so intently focused on their AI spending and their AI ROI, return on investment?
You know, everybody is in an arms race here. And I think at the end of the day, Carol, you could make an argument that because Alphabet came first and investors got a little jittery on the roadmap for the spending on AI and the return on investment, remember that coming into this week, tech had been pretty roughed up. So it almost, dare I say, set the bar lower for the tech giants that would be putting out numbers this week. I think that at the end of the day, longer term, and Mark Zuckerberg said it himself in his interview with Emily Chang not that long ago, there is a possibility that all the spending they are doing today might be an overshoot, but they're right now trying to build a future where engagement can be increased through AI, that advertisers can have better, more targeted ads through AI, that they can have a much cleaner thread between software and hardware, like the glasses you're talking about. I think they really like where this story is going over the long term. They're probably getting a boost as well, just because there's a lot of eyeballs on big events right now, like the Olympics, and so they can benefit from that. But there's, the other side of AI that we don't know a lot about. Mark Zuckerberg spent a lot of time in front of lawmakers in Washington over the last decade. People are still a little concerned, maybe more than a little concerned, about the ramifications of all this AI technology that they're weaving into the Meta ecosystem. But, at the end of the day, if they can keep the bottom line in a relatively clean manner and keep growing the revenue story, Meta is in a position to have arguably a cleaner quarterly story than some of its peers.
Aisha, can you talk a little bit about the integration of Llama and AI into Meta Platforms' family of apps? Carol and I were joking about the idea of the result of all this investment in AI is just better targeted ads.
It's funny because Meta is one of those companies where the AI is all behind the scenes, right? So obviously they've been using AI for years, for decades, to recommend content on your feed, whether that's on Instagram or Facebook, whether that's posts and images or videos. And so a lot of it goes towards that. But then they've also released new products like AI chatbot that you can talk to, right? So Meta AI, if you go on Instagram or Facebook, it'll pop up and you can ask it questions and things like that. And so you see some product experiences. They also had rolled out some things like celebrity chatbots, so you could chat with a chatbot that looked and sounded like, Tom Brady, for example.
Knew you were going to say Tom Brady.
Yeah, they recently showed.
I remember he showed that off, right?
Yeah, they showed that off, but then they shuttered it recently, and so it's like, how much are those products and services really moving the needle for them? Or is it really just, again, like you're saying, going back to the core advertising business, going back to the feed, and how do they recommend content that users actually want to watch and view?
Can I help me out here? Is there something in this release that shows specifically, is there a number or something that says, yep, here's our AI investing and here's how it paid off? I mean, or John, do we just assume that if the revenues is beating, that it's because of AI spending? You know what I mean?
Yeah, I absolutely know what you mean. I mean, the first line in the press release itself was really trying to talk more about how AI is complementing the hardware that they've got.
Yeah.
And that might just speak to the fact that, go back a couple of years ago, as we were just highlighting, like, AI is technically not a new thing for the company, but it is the hot thing for the world to talk about. So it is front and center right now. But a couple of years ago, what was front and center was quite literally changing the name from Facebook to Meta, and talking about the metaverse and talking about, all their VR and AR opportunities. And so I think that there is still, because of the explosive spending in that area, maybe this is Mark Zuckerberg just wanting to put a pin in the fact that they can actually make all of this sing together. Right. I would imagine, Carol, you get more color on how they're connecting the advertising dots on the quarterly conference call. But the revenue growing, I think already analysts in reaction to this, as Bloomberg is reporting, are suggesting that is the case.
Listen, both of you, thank you so much. Bloomberg News contributor John Ehrlichman out there in Toronto. Bloomberg News social media reporter Aisha Counts in Chicago. Shares of Meta, Tim, right now up 5.4%.